Now it's time for charting futures. Here's Abigail Doolittle. And Abigail, well, it's a real risk-on day today. What side are you looking at? Risk assets or the havens?
Well, Caroline, we're going to start out with both, but then we're going to focus in on risk assets because with us today is Eric Dugan of 3D Capital Management, who only trades S&P 500 E-mini futures. So we always look forward to having him on for that expertise. But in terms of the full picture, take a look at this. The S&P 500 E-mini futures up about 0.5% off of the highs, but putting in another record high. Crude oil, another risk asset, signaling in some cases economic growth and demand up 1.4%. And there are those havens. Take a look at that. The sell-off in bond futures along with gold futures. Gold down 1.8%, the worst day since 2017. So investors want in on risk assets and growth and out of those havens as this year-end rally seems to be continuing. And when we take a look at this weekly chart of the E-mini futures that we've not looked at for quite some time, it appears that there could be some legs ahead for the rally to go right into the end of the year. Now, over the last several months, in fact, this is longer than a year chart, we see this range, the chop, the battle between the bulls and the bears, the uncertainty. But we also now see that with the set of weekly highs that we've been having recently, the second up week right now, it appears that the bulls are really trying to take charge. We also see that the 40-week moving average, which is the equivalent of the 200-day moving average, is rising. So it seems right now that there are more tailwinds for the bulls than not. So to talk more about this, I'd like to bring in Eric Dugan of 3D Capital Management. What do you think of that chart? It looks pretty convincing that we have a breakout of some sort on our hands.
2 weeks ago when we were on discussing similar things, nothing's changed. I mean, everything that we've been seeing since the middle of October with the breakout in crude, copper, the Pacific Rim stock markets, the European stock markets, it's all been confirmed over the last 2 weeks.
And you are always trading those other markets. You were just making the point that the S&P 500, it's really the last market to open. Let's take a look at the E-mini futures in relation to the Nikkei futures, because the Nikkei, the Asian market's the first to open.
Yeah, last time I was on, I talked about the train and listening to warning signs. The sun rises in the east and sets in the west. So if you look far east and you look at the Pacific Rim markets, whether it's the Nikkei, the Kospi, Taiwan, Hong Kong, China, that's where the trade day starts. All of those markets open before the S&P and provide clues for the daily direction of the S&P.
Okay, and
then
here,
clearly, exactly. So here we had a sell-off in the Nikkei in the first couple days of the month of October. Mid-October, I believe it was October 10th, a clear breakout in the Nikkei, as you can see here. And again, it's important to realize the Nikkei is opened well before the S&P. So these are clues. If you see a breakout in the Nikkei, the S&P, all it needs to do is confirm it with its own price action. That's what it's done. It's up about 8% off of the October low, and it's continuing through today.
So before we talk about why you only trade E-mini futures and why you trade them over ETFs, I know you are in and out each day, but if you had to put a target for your near-term bullish view, above 3,100, 3,200, any sort of sense?
We're very different. We don't draw trend lines. We use price and time. We don't have targets, but I will say that given what's going on around the world, as close as we are to 31 even, I could see us certainly testing 31 even. We're only 10 handles away from there. So
very close.
That would be a given. But, again, we made a multi-week high yesterday in crude, and then we dropped about 2% in about 5 minutes. So it's always about being prepared.
And that's one of the reasons that you trade futures, because you talk about how you can hedge risk. We have some bullets here as to why it is that you like the E-mini futures over, the various S&P 500 ETFs.
Right. So if you just look at today, the best vehicle to hedge stock market risk is the E-mini S&P. Introducing gold, which is down $30 today, or bonds, which is down 1%, that's just adding more risk to the portfolio. So you're really better off managing equity market risk with the equity market itself. And that's what we do using the E-mini S&P. That's why I say it's the best vehicle to hedge stock market
long
risk.
and short.
Long and short. You cannot effectively manage weakness without identifying strength. Obviously, we discussed the last time, 5% margin, very capital efficient, trades exponentially more volume and offers greater liquidity than an ETF. And it's also open nearly 24 hours a day. It opens at 6 o'clock at night, close at 5 o'clock the following night.